Hello again, traders. Doing over there from Drfx, Swing Trading Mentoring. Going to be taking a quick look at a few currency pairs that I think could provide us with trading opportunities within the next couple of days, based on the nature of the Japanese candlestick signals that have been so far formed on their respective daily charts and 4-hour charts. Now, market direction and trading opportunities are determined by analyzing the Japanese candlestick signals, trend lines, and consolidation patterns provided by the daily chart and the 4-hour chart. And once a trading opportunity has been identified, entry then takes place using the signals and patterns provided by the 4-hour chart. Of course, no trade is complete without a strong stop loss. And to protect the trade and ensure that we're able to stay in the trade and withstand temporary pullbacks until our trading target has been hit, we would place our stop loss at the strong areas provided by the 4-hour chart, which can be in the form of trend lines, uptrends and downtrend lines, the highs and lows of candlestick formations and counter trend line setups, as well as the boundaries of resistance and support of consolidation setups that have been formed on the 4-hour chart. Now, in terms of my analysis, I actually use FXCM to analyze the market and identify market direction, as well as entry signals. However, my live trades are actually done with FX Pro for two main reasons. The first is that when you're actually about to make a trade, you can actually see the exact risk and reward values in percentage terms, so that you can ensure that you're staying within the risk parameters that you have set for each trade, and that you're getting the minimum rate of return for the trade that you're about to make. And the second reason is that you can actually receive email alerts, so that you do not actually have to constantly monitor the trade until the trading target has been hit. Now, the first trading setup that we look out for to trade and take advantage of is the situation in which the market gives us the early set of bullish and bearish waves that lead to the formation of consolidation. So instead of waiting until the consolidation has been completed and then trading between resistance and support, once you're able to spot these early waves that tell us that the market is going to be forming consolidation, we can trade these early waves and capture early trading gains and continue to trade until the consolidation has been completed. The second setup that we look out for to trade is where, of course, after the market has actually completed the formation of consolidation, we would then trade between the boundaries of resistance and support. Of course, the two most common patterns that you will see are ranges, where the market allows us to form horizontal boundaries of resistance and support, as well as pennants, which can take three forms, depending on the angle of the resistance and support boundaries that have been formed. The third setup is where we trade false consolidation breakout reversals, where the market will attempt a breakout in one direction and then reverse sharply and take us back inside of the consolidation. Now, once any of those three trading opportunities have been identified, we then attempt to capture a trading gain of between 50 pips and 70 pips within 24 hours, using those signals provided by the daily chart and the 4-hour chart. In some cases, we would also target trading gains of between 30 pips and 50 pips, and also aim to capture these trading gains within 24 hours. So even though the 50 to 70 pip range is typically what we would get when we're day trading, it's still not really a day trading strategy, because what we're doing is holding our trades for 24 hours, which is generally beyond the time frame that day traders use to capture their trading gains. So it is similar in concept in terms of the pip ranges that we aim to capture, but it is more of an overnight trading strategy that ensures that we're able to comfortably capture those trading gains within 24 hours. Here was a recent example of this trading setup and this trading gain, where we captured 50 pips from the Canadian Japanese yen, and this represented a rate of return of 4.98% on my live account, which for many of you traders could have represented a rate of return of anywhere between 2% and 5%, depending on the level of risk that you would have taken for this trade. And you can see here on the left hand side an example of the email alert sent to me by FX Pro, informing me that the take profit order had been filled. And it is an example of one of the benefits of this trading platform that allows you to close the platform and not monitor the trade, so that you avoid the self-sabotaging habits of closing trades too early. Now, in terms of the patterns that have been seen for some currency pairs that could provide us with trading opportunities, first up is the Australian Canadian dollar, where based on the 4-hour chart that I'm seeing here, it looks as if it could be forming a consolidation setup over the next couple of days. Now, this was the analysis that I did a few days ago. And as you can see here, the market is in fact starting to pull back. And even more so now, over the last couple of hours, which has led to this bearish candlestick formation being formed here. So the overall anticipation is that based on these bullish and bearish waves that have been formed so far, it looks as if the market is going to be forming consolidation and will form additional bearish and bullish waves. And so the anticipation and the expectation is that this bearish U-turn that is now taking place would provide us with a trading opportunity to trade it down to the support boundary that has already been formed. Now, right now, even though this is a bearish candlestick formation, it's not the one that I would prefer to trade. I would actually prefer and actually anticipate that it will pull back a little bit and then U-turn and provide us with a candlestick formation in this area here, which would provide us with a better trading opportunity to take advantage of this movement. Because even though it is possible that the market can continue to move bearish with these types of candles until it hits support, what is also possible is that it can actually pull back temporarily and then provide us with another signal. So because of the possibility of a pullback taking place, my preference is to wait until to assume that possibility and avoid trading this right now, just in case the market pulls back, and possibly in doing so would take out our stop loss that we would have placed above this candle here. Similar situation is developing on the Euro Aussie dollar 4-hour chart. Again, based on the nature of the bearish and bullish waves, it looks as if the market is going to be U-turning at this area here as part of the formation of a second bearish wave that will lead to the formation of a consolidation setup on this time frame. Pound Canadian dollar daily chart. This one looks to be forming a fairly large consolidation setup, again based on the nature of the waves that have been formed so far. Recent signal given here is a bullish movement, bullish candle, and this may either rally all the way up to the support, or it can start to U-turn and reverse at this area here on its way to heading back down to this area before providing us with additional waves that will lead to the formation and completion of the consolidation setup. Swiss franc Japanese yen also looks as if it's going to be forming consolidation. Resistance boundary has already been completed with these two resistance points. This first one formed at this area here, followed by the most recent U-turn that led to this second resistance point being formed. We already have one support point formed, and so the market is expected to continue bearish a little bit before U-turning at this area here, either at the support point or a little higher up, before providing us with this rally, ahead of providing us with additional waves that lead to the completion of this consolidation setup. New Zealand Canadian dollar 4-hour chart also looks as if it's going to be forming consolidation. Well, actually this one has already been completed, clearly forming a resistance, a support boundary, as well as a complementing resistance boundary at this area here. So assuming that this is going to continue to move sideways, we're going to be anticipating a bearish reversal setup here that will allow us to take advantage of the movement bearish and capture a trading gain of between 50 pips and 70 pips. US Japanese yen, this one has also completed the formation of a consolidation setup, this time on the daily chart. And as you can see, the recent movement that took place here, which also took place simultaneously with the Canadian Japanese yen that we traded, took us down to the support boundary where we're at now, So assuming that the market is going to be completing or continuing to move within consolidation, then we're going to be anticipating the start of a rally that would be started with a strong bullish signal on this time frame. Now, even though all of the trading patterns and all of the setups that I trade are based on consolidation patterns, it is still very important to understand and master the concept of trends, uptrends as well as downtrends. Because, of course, when we're talking about movements within consolidation, you will have trends, both uptrends and downtrends that are taking place as the market moves from resistance to support. So it's very important to be able to analyze these accurately and to know how to trade them and anticipate when they're going to be broken, when these trends are going to be broken, and anticipate and know how to trade the trend reversals. So when it comes to uptrends, it's very important to understand the concept of support points, which are used to form these trend lines as part of the uptrend. Likewise, when it comes to downtrends, very important to be able to anticipate or spot the formation of highs that are called resistance points, and to use these resistance points to draw our trend lines. Now, because we're talking about movements within consolidation, it means that we're going to have to anticipate when the market is going to transition from an uptrend to a downtrend. And one of the ways in which we can anticipate when the trend is going to end is after the market has provided us with 3 or more setups as part of a particular trend direction. So usually what you'll find is that after 3 setups or maybe even 4, the market tends to become volatile and start to slow down. And usually when that takes place, it usually means that the market is going to be starting a reversal that starts the trend direction in the opposite direction. Another thing to anticipate is that after the market is, or when the market is transitioning to a new trend direction, one of the most popular candlestick patterns that you'll come across are bear crowns and bull crowns, otherwise known as head and shoulders patterns. So you'll find that the market, if we're in an uptrend, for example, you will find that the market will form what is called the left tip, which is the last setup as part of the previous trend. And then it will form the center tip, which will be the last U-turn that takes place that leads to the start of the reversal. Once the trend lines that have been formed along the way have been broken, the market would then form a third setup in the form of the right tip, and then this would be broken with a candlestick formation that would indicate the start of the new trend direction. So this is one of the ways in which the market can transition from an uptrend to a downtrend and from a downtrend to an uptrend. So here you can see an example of this setup on the Canadian Japanese yen, which we traded earlier this week for a 50 pip gain. Here we can see that on the 4-hour chart, the market was transitioning from an uptrend to a downtrend, and that this was the bear crown setup that was formed as part of this movement. So the left tip was formed at this area here, with this area being the center tip that led to the break of the uptrend line. And then the right tip was the first setup that was formed as part of the new trend direction, and that indicated that the market was going to be continuing in this direction as part of the new downtrend. And so, based on that analysis that we did of this situation on the Canadian Japanese yen, entry then took place, anticipating that the market was going to continue lower, with a stop loss placed at 84.83, just above the downtrend line here, which is one of the areas that we can use to protect a trade on the 4-hour chart. Entry then took place at the close of this candlestick formation, this bearish candlestick formation, with the target set to capture a trading gain of 50 pips. And as you can see here, once again, we were able to capture this trading gain, which provided me with a rate of return of 4.98%, and which hit our trading target in just over 13 hours, well within the 24-hour holding period that we set for these types of trading gains. Another thing to be able to master when it comes to movements within consolidation are the bullish and bearish candlestick signals that start and continue trends within these consolidation setups. What you'll find is that double bottoms, double tops, as well as ABC signals, bullish and bearish, these tend to be the two most common signals that start transitions or that start trends within consolidation setups. So in addition to bear crowns and head and shoulders patterns and bull crowns, you will also find that these candlestick formations also tend to be associated with the start of movements in the opposite direction. And if for some reason you're not able to enter the market at the start of the trends, you can then take advantage of these movements, midway the trend, by trading these types of signals, morning stars and evening stars, as well as bullish and bearish engulfing candlestick formations. Of course, it is also very important to be able to identify the types of false breakout reversal signals that can take place. Double bottoms and double tops, ABC signals, as well as the formation of small consolidation setups outside of the main consolidation. These are the three most common ways in which we can anticipate and see that the market is going to be starting a false consolidation, breakout reversal. So again, it's very important to be able to master and identify these candlestick formations, which present themselves in normal movements that take place within consolidation, as well as when it comes to false consolidation breakout reversals. So once you're able to identify the types of patterns and master these patterns that lead to the movements that take place within consolidation, then it becomes a lot easier to trade these consolidation setups, which tend to be the most common consolidation pattern or trading pattern that you'll come across when it comes to trading the daily chart and a forward chart on a weekly basis. So mastering them will allow you to be able to anticipate when the market is going to be transitioning from an uptrend to a downtrend and vice versa. And you're also going to be able to anticipate when is the right time to enter and where is the best place to exit your trades. Because even though on most occasions you will be exiting at the opposing support or resistance area, there are situations in which it is actually better to exit your trades just before the market actually hits that opposing support or resistance point. So that is a trade secret that I have, so to speak, that I've discovered about the currency market. And this helps us to avoid unexpected and surprise reversals that can take place from time to time before the market actually hits the support or resistance area that we're trading towards. So that's it in terms of the analysis of these currency pairs, which I think could provide us with trading opportunities within the next couple of days. Some of them within the next 12 hours, I believe. So I'm going to be monitoring them, and if I see a trading opportunity provided, I will send you a trade setup as per usual, detailing the main elements and the main technical factors supporting the trade, the stop loss, the best area to place our stop loss on a forward chart to stay in the trade, and the best trading target to be able to maximize on the movements that are taking place ahead of sharp market reversals. So until next time, traders, happy trading.